Hi, this is Bo Yoder. Now, when I was first learning how to trade back in the late 90s, the internet was sort of in its infancy. There really were only books and courses available to traders. The ability to find a mentor online or a community where you can share screens and share real-time information just didn't really exist. And most of the books that made a huge difference for me in my learning had been written back in the 1970s or even back in the 1900s. Because many people don't really know it, but there was a huge bull market and an interest in trading back in the days leading up to the 1929 crash. There was a big bull market in 1909 and a lot of books written around that. So there's really wonderful work that was written in that historical time that I have on my bookshelf that nobody's ever heard about because really these titles have been lost. But out of the hundreds of books that I've read on trading, there's really very little written about what it's actually like to live this life, to do this day in and day out. So when McGraw-Hill came to me to see if I was interested in a book deal back around 2000, I think it was, I figured, well, this was my chance to contribute, to help people by showing them the reality of what it's like to trade for a living. Because there's a heck of a lot written about different strategies, setups, ways to analyze the market, but actually sitting here, butt in seat, in front of a screen, is really, there wasn't much out there. So I'd kind of like to update that for you all now because I know there are a lot of people coming to the market who may or may not have a distorted vision about what it's really like. So let me go through a day in the life for me as it is now, and hopefully that will be helpful for you. So I trade two different programs for my personal account. On one hand, I have deep time frame positions with holding times measured in days to weeks, and also quick day trades with holding times measured in minutes to hours. So for my deep time frame positions, I look at all the stocks in the S&P 500, the NASDAQ 100, and the Dow 30. So, 600 stocks basically. I go through those at least once a week, looking at their daily and weekly charts. And I write down on a physical piece of paper any of those that interest me for any reason. And I don't really spend a lot of time analyzing it. I just go, oh, that's interesting. Oh, I like that one. Oh, I better look at that one later. And I just mark those down. That's my first pass. Then I take a break. Walk the dog, play with my son, talk to my wife, just separate myself from that, what I call screen trance, come back with a fresh brain and go through my notes. I'll usually have somewhere between 10 and 20 stocks that are of interest. And then I'll really put all of my analysis focus and all my tools onto that, trying to find 2 or 3 stocks that I think are really going to be great over the next couple of weeks. Most of the time, there's not a lot of opportunity, but now and then, of course, you'll have a valid setup. And then basically take an entry, set your stop, and then ignore it for a while. Let that thing go. So that's really a very high impact for a small amount of work. Okay, but you don't have a lot of money velocity there. You don't have a ton of opportunities. You're waiting for the big super cycles, and so there's a lot of patience involved. All right, there's a lot more time and energy in my day trades. So as I record this, I have a 9-month-old son. So my day starts pretty early, between somewhere around 5:30 or 6:30 a.m. So I wake up with him, and then we both head downstairs to share the morning together so my wife can catch up from the late night feedings, which she takes care of. So he gets a clean diaper, and then I set him up to play. Then I go take care of my body by drinking 24 ounces of water with 3 grams of baking soda and 2 grams of vitamin C mixed in. So the baking soda buffers the acids in the C so you don't get heartburn. And this little cocktail gives me a strong surge of energy that caffeine just doesn't match. So I don't drink coffee until I have breakfast, which is usually somewhere between 11 o'clock and 1 o'clock. I pretty much get up, go to work in the morning. And to me, that and the vitamin C cocktail keeps my brain cranking, keeps me very creative, keeps me very focused in the flow, and that works out really well for me. Now, before the market opens, I check the news to make sure that there aren't any big shock events that I should know about, such as earnings or election results or something wacky like that. Then I check for any economic releases like unemployment numbers or a rate change from the Federal Reserve and figure out when those are scheduled to be released. These can really disrupt the flow. It's a little bit like throwing a rock into a puddle. So as a day trader, I don't want to have something coming from outside the market that's going to cause a splash. And so I don't want to be in a trade when these freight trains hit the market because they can reverse things, instantaneously because of the outside stimulus that hits. So if the day is super disrupted, I'll just skip the morning session. I don't even worry about it. Let that unfold without me. And I'll just enjoy my morning, my life without screens or worrying about about the market until about 1 p.m. New York time, where I'll re-engage and see what happened and see if there are some trends into the close that will offer day trading opportunity. Now, if there isn't any news to deal with, I may go ahead and just task the day as a day trading day. And so I'll get focused and I'll start watching the markets on multiple time frames at about 8:30 a.m. Again, these are all New York time, Eastern time for me. So I look at many charts. I've got a 20-second chart, 1-minute chart, 5-minute chart, 15-minute charts, hourly charts, all up on the same screen for the same symbol. And this allows me to watch the markets fractally. I can watch the money flow in and out, kind of like a tide of money as I wait for opportunities. You can see the money coming in. You can see the smaller time frames begin to jitter as the markets reverse, and it really gives me a lot of clarity and a lot of accuracy in my forecasting operations. And I've discovered that I have the ability to focus with great intensity and clarity for about 2 to 3 hours. And then I get tired and I start to make dumb mistakes that I regret later on. So for me, even though I might be trading 4 or 6 hours throughout the course of a trading session, I'm really not just sitting there staring at the screens, drooling and engaging what I call screen trance. I'm bopping in, I'm taking a look at my markets, I'm noticing what's happening, I'm seeing if the market is moving towards a potential setup. And I'm really only sitting here staring at the screen, maybe listening to music or an audiobook in the background, waiting patiently if the setup is imminent. Okay, a lot of the time you'll be able to see the market and say, okay, great, we're rallying up to resistance. I want to go short. I believe that resistance is going to hold, and this is going to be a major reversal that I'd like to participate in. But, it's probably not going to hit that resistance for at least half an hour. So I just literally use my my cell phone, set a timer for 30 minutes, and when it dings, come back and check the market. And so for me, even though I might task a day for day trading and spend quote unquote 6 hours doing it, I'm probably only sitting here butt in seat, eyes on screen for maybe 45 minutes to an hour and a half tops during that time. And that includes after I take a trade, put my stop loss in to make sure I'm covered. If I have a very clear profit objective, I might go ahead and put a take profit order in, but mostly I'll enter, put my stop loss in, and then I will double check everything and then walk away, because there's really nothing I can do to bring value to that trade at that point. And so I'll figure out when I believe that the next value-based decision will come. Maybe there's a market that's reversing and it's going to test a major resistance level, and so probably take half hour, 40 minutes, maybe an hour or two to get there. And I'll just come back in and peek. I've got my screen, I've got my laptop. I might just keep it nearby, but I'm not obsessing over the screen, watching every tick. I'm really just waiting for it to do something, and then when it hits that level, I'll make a decision about whether I want to stay in that trade or trail a stop or exit. So that's something I can't reinforce enough. Is I'm not sitting here just staring at the screen like playing a video game all day long. That will create incredible fatigue, stress, failure, and burnout in my experience. So if you can't bring value to the market in that moment, or there's not a value-driven moment that's coming, walk away. Set a timer, come back. A lot of different trading systems have alerts. You can tell it to ding you when a certain level is reached. Use those tools. Outsource that time and that boredom to a machine which doesn't care, so that you can go off and do other things in your life. You'll be a lot happier, you'll be a lot lower stressed, and it won't affect your return at all. In fact, it'll increase your return because you're not going to be making mistakes with the same level of frequency if you're just grinding it out and getting super fatigued and super overstimulated and tired. So for me, I day trade the most liquid instruments. So that's the ES, which is the S&P 500, the ZN, which is the Treasury bonds, futures, the Eurodollar, the Japanese yen, and gold. That's pretty much all I look at during a typical day trading day. Now, in a typical day, and this kind of blows people's minds, because I'll probably have anywhere between 10 and 20 valid opportunities, and I will end up taking maybe 1 or 2 trades. Right? Now, this shocks a lot of people because they believe, and they're dead wrong, but they believe that the harder you work and the more you trade, the more money you make. And again, that's just dead wrong, totally wrong. Put that out of your head. And in fact, actually, here, let me give you a gift. This one concept is worth more, literally more money than whatever you paid for your last training product times 10. And I'm going to charge you, ready for this? $0 for it, okay? Think you can afford that? Are you ready? Pencils out. Here it is. Trading is not work. You can't push harder, work faster or longer, and make more money. Because trading is not work. Trading is the analysis of deal flow. Think of it. Every valid setup is a mini deal opportunity. Invest X and you have a chance at X return. It's just like a little mini business deal. And just like business deals, there are a lot of them, and not that many of them are worth doing. In fact, there's a great quote, I think it's from Warren Buffett, who said the difference between the successful and the ultra successful comes down to someone's ability to say no to opportunity. And in trading, it's very, very true. So when I have a setup, and a setup is just a term for, okay, here's the buy signal, right? So you have to either decide to buy it here or to pass on the opportunity. Each one of those setups, to me, is a business deal. So, okay, here I have an 80% chance to make $1 for every dollar I put into this deal. Fine, okay. Over here, I have a 50% chance to make $3 for every dollar I put into this deal, right? Two different opportunities, two different chances for winning, two different edges in the market. So I want to challenge you to free yourself up from work slavery when it comes to your trading. Because you really do make more when you trade less and with more analysis. Think about this for a minute. If you and I were competing and we were going to trade the same instrument for an hour, and try for a bet or something like that. If I take a trade and make $1,000 and you take a trade and make $1,000, great, we're even. If I pass on the next opportunity and don't lose $1,000, and you take that second opportunity and lose $1,000, you're back to $0 of profit for the day, whereas I'm still sitting on that $1,000 profit. I'm ahead of you by $1,000. So it's about keeping the money. It's really important. It's really awful when I hear about somebody who comes to the market all excited about the freedom and the money that you can make trading, because those are all true possibilities, potentials. But then a few years later, after going through a very painful learning curve, all they've really done is created a very high-paying and grindingly stressful job to replace their old, lower-paying, grindingly stressful job. So don't fall into that trap. Trading's not about money. It's about lifestyle and freedom and the ability to do whatever you want, when you want, how you want. Okay, so there's a lot of other intangibles that are very, very valuable in this business. And one trade can produce 2% or 5% or even now and then 20% for your account. You just don't need that many winners to put up big numbers. What you need to be able to do is to keep those gains, and not just piss them back into the market by overtrading and trying to work super hard and therefore not being picky enough about what trades you choose to put your risk capital into. If I gave you $1 million to invest in businesses, and you just ran off and bought the first 4 businesses that came up, you'd probably lose most of that money and have a terrible time. Being careful, being able to pick and choose is really where, being able to say no is really where it all comes down. So I've created a trading program to teach you how to do all the analysis you need to do to be able to find out which trades to take and which are likely to instead take your money and give you a bad experience. And I want you to understand how this is all possible. So in order to get you there and understand what it takes to have the consistency that I know you want to have, you got to think differently about your trading. Because there's a hidden profit of cycle, of profit and loss, kind of a tide of money that you probably aren't aware of right now, which is causing you to experience the uncertainty and the inconsistency that causes so much doubt and pain for traders. The solution to this is to become aware of this money tide, this payout, payback cycle. And that was the breakthrough that I discovered decades ago now, which finally broke me free from the manic depressive life of a trader, right? The big roller coasters of winning and feeling awesome and losing and feeling depressed and cranky. And understanding payout payback analysis put me in a place where I actually knew exactly what to expect from the markets. And therefore I could really attack the markets when they were vulnerable with great confidence that I'd be producing a lot more profits with more consistency. And that pretty much eliminates stress. So I have an hour-long training on this that I'd like you to have. Go to maxprofitcycles.com/training to watch this. There's no email or phone number needed. It's just a video on the page. I know it's probably going to crack your mind open a little bit and force you to think about your trading in a different way. So, please set aside an hour when you've got a time to focus. Go to maxprofitcycles.com/training to have it. Again, there's no marketing shenanigans, just a video on a page. If you'd like to go deeper on this, you'll have a chance to sign up for my trading program at the end. But for now, you got to understand payout payback, because it's going to unlock a lot of the frustrations and make things clear about why this has been happening to you, and how to get out of that loop, that trap, and get consistent and confident that your consistency will continue into the future. So I want this to be the month that things change for you. So go to maxprofitcycles.com/training and take advantage of that while it's available.